Alright guys, good morning guys, welcome back to my channel. This is your boy Mo. Welcome back to FX Fabric. Today there is no time to waste. We are breaking down US30. As usual guys, we always begin from the top-down analysis, and actually today we are beginning from the daily. No time to waste on the weekly. We all know what's going on from the weekly. If you've been following, yesterday I posted a video. Go and check it out and see how I perfectly predicted the market, where it's going. Well, US30, all these indices, and US100, the way they are moving, wow, it's very clear where they're going. All right, let's dive deep into this market. Let's see where we are going, where we're headed today, and get ready to make some money off today. So today, as you can see guys, yesterday the market closed above the previous high and broke through, and that is good news, because once we break through the previous highs, what does that mean? We are ready to go on to attain higher highs. You can see actually I already have my trend line here in trend lines and my support lines here. Yesterday I drew, if you actually go and check out that video, I drew this demand zone here yesterday, and look at how it respected it and took off. So let's look at the 4 hours. Okay, from the 4 hours, the same story. Yesterday we drew this, if you can see this demand zone. The market, actually the day before yesterday, the market came, pushed through this area, came back here and rejected this area immediately, then took off again and created a higher high. After creating a higher high, the market, well, came back to this area. Why it came back to this area? If you know supply and demand, you should know why it's coming back to this area. Big banks letting off some trades, inducing sales from smaller traders. And what does that mean? They are ready, after you guys free up those trades, you've sold here, freeing up trades, they come here and they buy, and that means it gives these big banks more trades for them to get into the market, to take the market up higher. So with US30 and US100, I actually mentioned this yesterday, do not rush into the trade. Do not rush into the trade. Indicate your zones first and make sure your zones are correct. Because look at this example. If we had indicated just this, let me actually delete this, just a minute. Because let's say you indicate, you looked at this point and you see where I've placed my line there. Okay, so guys, imagine you had placed your support zone here, and that is for support and resistance. Yes, imagine you had placed your support zone here and be like, when the market comes back here, I'm getting in, put a very tight stop loss, let's say right below the support zone. First of all, it would have taken you out here, but look at how it came back down here and took everybody out before it took off. Which is why this zone, I would say stop looking at support zones at strict zones, like at a strict line. It's not. Me, that's why I prefer demand zones and supply zones, because a demand zone and supply zone, it's a zone, it's an area. It's not a single line. You guys, you understand, right? It's not a single line, it's a zone, meaning that when market comes back to that area, it can push through it a little and leave a wick and then push back up. That doesn't mean it has to stop at that line exactly. You understand? In support and resistance, yes, sometimes it does that, it respects that. But in supply and demand, if because that brings us back to the essence of what a supply and demand zone is. A demand zone, that is a zone where banks are getting in, taking on those trades to buy, or they are freeing up sell positions they have had, you understand, which starts to push the market back up. So it's not at that single price. For example, let's say at price of 42,676. No, it's the whole zone. You see this sell before the buy. It's the whole zone where these big traders, they are freeing up sell positions in order to prepare to get into buy positions. You see, so the whole of this zone, these guys are doing exactly that, and that's why you see wicks pushing through, going back up at the same time. So if you are trading this position, let's say if you had caught this area, looked at this point and know that this market, look at actually how it even stopped around this area, just shows you that that's an area of resistance. So if you had caught this trade, the best thing you would have done is wait for all this. This is a 4-hour time frame. Look at how long. 1, 2, 3. That makes it how many? Yep, that makes it 12 hours on how it played around. So the best thing it would have been to wait for this market to come play around here, and once it starts to take off, you place your trade here. 1 to 2 is enough. I don't know what else you need. And then you leave a good stop loss. Don't use tight stop losses, guys. You'll get taken out. And then target the highs. You see, 1 to 2.7, enough. You're out. This would have taken some time, and if you've been trading US30, US100, you should know that these trades, they take some time to work out. If you want a good profit to reward ratio, a good risk to reward ratio, guys, you have to be patient. Put a good stop loss, and don't use those tight stop losses. You get taken out very fast, very fast. All right, guys, let's move down to the 1 hour. On the 1 hour time frame, as you guys can see, I have a trade which is already running, and let me actually delete this and show you how I came up with this. This is a trade which I placed yesterday. From here, after it rejected this point, I got in with a 1 to 2.5. I hope it plays out, but I've already taken some partials because if you know, trade, there is what we call trade management. I can teach you how to do that. Knowing how to place a risk to how to get the right risk reward ratio is one thing. Knowing entry points is another, and also trade management is another, guys. In one trade, a trader can make money from it, and another trader can lose money in that same trade. How does that happen? It happens every day. That's why, guys, new traders like you guys lose money, and professional traders continue to make money out of the same trade. You've lost money. And it's not because you got the direction wrong. Let's say it's a buy, for example. Here it's clear buys. Stop looking for sales, guys. Don't waste your time. It's clear buys here, but you will place a trade, you will hold it for long, let's say, and lose money, and meanwhile another trader will make money out of it. Those are simple strategies you need to know how to manage your trade, and how you can take profits at what levels in the same trade. Exactly. So here you can see I already placed my zones here. The first zone, we've looked at this one already. We rejected it. The market moved up, and then it formed a base here, and then continued up. So what do we expect? Market may actually come back and revisit this area. Actually, if you can see my trend line, look at it. Yeah, I drew this trend line some time back, and you can see that there is a possibility of market coming back to this trend line at this level and taking off. So what do we expect? Very simple, guys. We expect market to come back here and taking off. Or if the buy push is very strong, we can actually expect it to come here, touch here, and take off. So those are the two possible areas of reversal. Yep, exactly. So that's what we expect, guys, today. Make sure you draw your lines very correctly. For example, this line, look at this area. It came here, created a demand zone around here, and then created a new high, came back, pushed through it, and look at how that demand zone became a supply zone in the down push. You see, pushed back down, pushed through it, and came back and settled around this area, and in turn forming what we call this is a resistance line. You can see, guys, it formed a resistance line on which it bounced off, creating this. Look at how it rejected it and then took off immediately. So if you are scalping, actually somebody would have made money off this thing very fast, targeted these highs and out of the market, you see. But I place long-term trades. Most cases I'm a swing trader. I can hold a trade for a day or two, you see. And yeah, I prefer the long journey. So 2.5 trade is what I placed, expecting market to come back here again and then bounce off to take off again, you see. But of course, if you're seeing swing trading, you have to place more than one trade. That is some of the tactics in which you can manage a trade and not lose money, you see. For example, when it came, touch this high here, you should have taken profits around there, continued somewhere here, take another profit, and then move the stop loss to the open, leave a runner to take off, and then take out your third take profit, you see. For you guys who are in my channel, you know this is how I trade. Check out our channel, guys. Go to our Telegram channel. Actually, the way to find us, just go to my YouTube channel description. You'll find links to my Telegram channel, links to my personal account. Shoot me a message if you need help with mentorship. I can teach you all these tactics, how to draw supply and demand zones, how to manage your trades, how to get good risk-reward ratios, and how to get money out of a trade even when it doesn't go immediately in your direction. You understand? So those are the few things I can share with you. So check out my channel, Telegram channel. Shoot me a message. These days actually do account management. If you have your account, you're new in this area, you need help with trading, shoot me a message and we can see what we can do with that. Yep. So guys, that was me. That's US30 today. Let's hope our analysis works out today and we see the market going back to the highs. Yep. Success, guys. Peace out.